Hi, this is Mark Idam from Honu Trading with a very important concept for individual investors and traders to master. Do you want to be right or do you want to be profitable? First, my disclaimer, this really hits home on the point that risk management truly is our job one. You can follow me on Twitter at Honu Management, Honu MGMT, and if you find this valuable, take a moment to like and subscribe. Today's agenda in full. On Twitter, you get what's called a pinned tweet, which allows you to highlight one of your more important concepts. This is a review of my pinned tweet, and again, at Honu Management on Twitter. We're trained to be right from a very early age. We bring that same mindset to trading. That can lead to what I call the nastiest four-letter words in trading. And then we're going to review the mathematics of loss and talk about the full profitability formula. The answer to that is really what helps you determine, are you competent enough? Are you qualified to use margin, options, or futures? And I'll end with the concept, only you can prevent portfolio disasters. So here's a picture of my pinned tweet from Twitter. And we're going to go through this in a little more detail, but I just want to give a picture of what it looks like. From kindergarten, first grade, grade school, we're trained to be right. If you want an A, depending on your class, you've got to get 90 or 93% on all of your tests. If you want to pass, you need 70%. Some other things, like a driver's license, is pass-fail. And if you want to get a job, you've got to pass the interview process. All of these different things within our life train us, we want to be right. And sure enough, we bring that same mindset to our trading and investing. We get caught up in our win-loss ratio. Any trade with a profit becomes a win, no matter how small. Hey, I made money, yay! Any trade with a loss, well, it's a loss, no matter how large we let it grow. And this gives us our win-loss ratio. We buy something and the expectation will go up. Number of wins, how often were we right? Number of losses, how often were we wrong? And who doesn't want more wins? Well, what this does is leads to a quest for the holy grail of trading. We try new ideas, new methodologies, new indicators, new studies. We follow new people. We respond to advertising ads that have 90% win ratios. By the way, just as an aside, those are rarely very profitable. Over the years, I've had many people tell me, look, I just don't sell at a loss. A couple of them emphatically. I refuse to sell at a loss. Well, good luck with that, buddy. Because a loss is a mistake, isn't it? But what this leads to, this avoidance, this leads to the nastiest four-letter words in trading. Don't worry, it's a G-rated program. The first one is, I hope it comes back. Now, I worked at Schwab for many years, and Lizanne Saunders was the chief investment strategist. Very, very good. She, among others, continually emphasized that hope is not an investment strategy. Well, if it keeps falling and the more familiar you are with the company, maybe you used to work there, maybe you've studied the company's fundamentals and their products. Well, I know it'll come back. Problem is, we don't know jack. But then that leads to, well, I don't want to sell it here. It can't go any lower. Really? Is it trading at zero yet? And even if you think back, in March of 2020, crude oil futures traded at negative $37 a barrel. Well, I never thought I'd see that happen, but don't say it can't go any lower, because it can. And then finally, the last of the nastiest four-letter words is, why, question mark, does it keep dropping? And yes, I know it's cheating to put question mark in there to get to four letters. But hey, it's my story. So let's look at this in a real-life situation, Tesla last year. Now, by the time, this is Tesla in November of 2022, October, November, by then it had already dropped 25% from its peak in November of 2021. So when it drops and gaps down, actually, people say, well, wow, I hope it comes back. Falls a little more. Well, hey, I know it's going to come back. I mean, the guy's the CEO. He's also the CEO of SpaceX, and they figured out how to land 14-story rockets on a barge in the middle of the ocean. So I know Tesla will come back. Really? We don't. Keeps dropping. Well, I don't want to sell it here. It just can't go any lower. And then it just goes onto a power dive. Why does it keep dropping? And this is such an important topic, the why. I'm actually going to do a separate video on this. Because in many cases, we don't know the why until after the fact. Even if we did know the why, hey, it doesn't matter. Price is dropping because people are willing to accept less money to sell it. In fact, it's dropping because they're desperate to get out, and they'll take whatever they can get, even if it's a lower price. So let's review the mathematics of loss. So losses are linear, 10%, 20%, 50%, and so on. But the percent gain required to get back to even from those losses becomes exponential. If I lose 10%, I only need to make 11. That's not bad. If I lose 20%, well, I got to make 25% to get back. Most people can do that. But if I lose 50%, I've got to double. I've got to make 100% on what's left just to get back to even. So it's surprising to many investors, but most professional traders have win-loss ratios below 50%. They're wrong more often than they're right. This leads to the profitability ratio. How much money do you make on average in your winning trades divided by how much on average do you lose on your losing trades? This is the golden rule of trading. Cut losses short. Let profits run. 6 words, incredibly easy to say, but mind-blowingly difficult to actually do. Why? Because the emotions of greed and fear get in the way. So let's look at the full profitability formula. Our win-loss ratio times our profitability ratio equals the total amount of money we've made divided by the total amount of money we lost. Now, it doesn't take Captain Obvious. In fact, I've said this so often, my wife promoted me to Colonel Obvious. We want this number to be bigger. And this becomes your personal profitability ratio. How competent are you as a trader or an investor? The higher the number, of course, the better. Well, this provides a quantitative or a numerical answer to should you trade on margin, should you use options or futures. In the 1997 book, Trading the Plan, Robert Deal devoted an entire chapter to this concept. In fact, this is the first time I'd ever seen that profitability formula. It's not exactly rocket science, but this is the first time I'd seen it. And I actually got to see Robert speak a couple of times in San Francisco. So if we are trading so poorly that we're actually losing more money than we're making, our profitability ratio is less than 1, cash only, no margin. 1.0 to 1.4, up to 50% margin. 1.5 to 1.9, up to 100% margin. But I would emphasize we should rarely be going that high on margin, even if you have that level of competence. If you're trading above 2.0, you're making twice as much money as you lose, hey, then it's okay to trade options. And 2.5 or more, it's okay to trade futures. So to sum it all up, remember, only you can prevent portfolio disasters. And that's why this concept is so important. Take care, trade well.